Good morning everyone and welcome to another RF Crypto video. Today's markets, they're not doing so well. They haven't been doing well for the last week or so. The markets have been down by around 10 to 15% in the last 7 days, as you can see. Bitcoin down by 3.44% in the last 24 hours and about 14% in the last 7 days. This is a massive change in trend because we saw Bitcoin, Ethereum, BNB and all these top 10 coins performing quite well or relatively stable in the sense that either they would go up or trade laterally. A few weeks ago, Bitcoin's price was at around 41, 42,000. It would go down to 38 and then up again to 41, 42,000. So it was up and down. However, it was in a predictable pattern. However, in the last week or so, we saw Bitcoin lose a lot of its market cap. We saw Ethereum lose a lot of its market cap, and the global crypto market has bled by almost 15% in this time period. Looking at the top 10 coins, everything is red in the last 24 hours and everything is red in the last 7 days. And especially something to look at is Terra Luna, down by almost 30% in the last 7 days, and this is attributed to Terra USD or UST losing its peg to the dollar temporarily. We'll speak about that a bit later. Your meme coins are down by 18%, Dogecoin is down by 8%. Dogecoin has relatively outperformed the market in the sense that it hasn't fallen by as much as all the other coins. However, we are seeing red all over the place. Looking at the Bitcoin charts, we see that Bitcoin was trading laterally for the last couple of weeks and it was trading between 38,000 and 42,000. However, since last week, the price of Bitcoin took a massive tumble. This red candle right here represents a massive sell-off where the price of Bitcoin fell from 39,000 all the way down to 36,000 and it continued going down and reached around 35,000 before it stabilized. However, ever more bad news coming into the market, the prices kept going down and now we are at 33,400 and we haven't seen these prices since 2021. We see that the price of Bitcoin has broken support levels over and over and over again. It first broke the $38,000 support level, the $36,000 support level, and around the $34,200 support level. And now there still are some red candles that we have to look at. We still don't know where the support level lies. The price might go down or it might stabilize, trade laterally, and then go back up. But at the moment, there is a lot of downward pressure on the price of Bitcoin. So the general consensus is that the price will head downwards. There are some people saying that there is downward pressure and the prices will go down all the way to 28,000. It's a matter of time till we see that. However, we haven't seen the price of Bitcoin go down below 30,000 for a very, very long time. And if it goes down below 30,000, it will send a massive bearish signal to the market. We are technically in a bear market at the moment. However, the price of Bitcoin going down below 30,000 is an extreme bear signal. The UST stablecoin briefly loses its peg to the dollar and consequently Luna drops by more than 10%. So the closely watched Terra USD stablecoin, which is a stablecoin that has been up and coming, it has been said to be the next big rival to USDT and USDC. This stablecoin briefly lost its dollar peg on Saturday, falling to 0.987 before bouncing back on Sunday. And its sister token Luna, which is owned by Terra, so both Terra USD and Luna are owned by Terra, they fell by 10%. Of course, because if something bad happens to the stablecoin, the main Terra coin, which is Luna, will suffer negative consequences. And this weekend's DPEG was not the first nor the largest in Terra's history, but it marks the first time that the algorithmic stablecoin has lost its peg since it's embarked on its much publicized bid to build out Bitcoin and Avalanche reserves. So as you know, Terra has said that it will buy $10 billion worth of Bitcoin in order to back their Terra USD or their UST stablecoin. And ever since then, there hasn't been any DPEG. However, on Saturday, we had the first one, and it's not good news. The DPEG was a big one, and there was a lot of market value wiped out from UST and Luna as well. However, it wasn't enough to cause Terra to tap into its Bitcoin reserves because there was deployment of hundreds of millions of dollars of rescue capital, enough to bring back the price of UST to nearly $1. So it is good news that UST has a lot of backing to the point where it doesn't need to tap into its tightly held digital gold Bitcoin reserves. So the depegging appeared to kick off with a series of major withdrawals from Anchor Protocol, which is a lending market that offers high yields to users who deposit UST. Over the weekend, Anchor's total UST deposits fell from 14 billion down to 11.2 billion, which is almost 20%. And large quantities of UST were also withdrawn from liquidity pools on Curve, which is a DeFi protocol that allows users to swap between stable currencies such as UST. A $150 million liquidity withdrawal came from Terra creator Terraform Labs, and they say that they made the withdrawal because they wanted to shuffle the funds around, and they redeposited 100 million after realizing that UST has become depegged from the dollar. So this liquidity withdrawal was just badly timed. It came at a time where there were a lot of money that was flowing out of Anchor Protocol, which caused the depeg, and this liquidity withdrawal by TFL just further exacerbated that. So adding a tinge of conspiracy to yesterday's events, as it usually is the case in the crypto circle, a single wallet also raised eyebrows for dumping $84 million worth of the UST stablecoin on Ethereum and 108 million on Binance. And this is what they're calling a coordinated attack in order to bring down the stablecoin. However, Do Kwon has said that, this is just FUD and it's just a way to decredit the stablecoin. And I think that Do Kwon himself and his circle took a couple of steps in order to stabilize the UST stablecoin, because after Kwon started tweeting on Saturday, a single wallet appeared intent on rescuing UST's peg. In a span of around 10 minutes, the wallet swapped over $200 million of UST for Tether in order to rebalance UST's Curve pools, therefore boosting its price. So we see that UST does have a lot of backing. It might have been a coordinated attack. It might have been people just pulling out liquidity from the market just because the crypto markets aren't doing so well at the moment. However, it just paints a bleak picture that a stablecoin being depegged has repercussions towards the whole market, and especially, obviously, Luna, which is Terra's main coin. So because of this depeg, LFG, the Luna Foundation Guard, is to deploy $1.5 billion to bolster UST peg and build Bitcoin reserves. So obviously, amid the sharp pullback across Bitcoin and the wider crypto market this week, the LFG is set to deploy 1.5 billion worth of capital to help protect Terra USD's peg to the dollar. And this is a Singapore-based nonprofit, and it's part of the Terra Luna ecosystem, which is tasked with collateralizing the network's algorithmic stablecoin, which is UST, to keep its USD peg intact, while also managing the network's reserve. So LFG has two main tasks. One is to ensure that UST is one-to-one in terms of its peg to the dollar, and as well as managing the network's reserves in order to make sure that there are enough reserves in order to back the network itself. And it's been doing a pretty good job till now, since the network has been stable for so many months. So the details of this help is that it will first loan out $700 million worth of Bitcoin to over-the-counter trading firms to manage and trade the capital. Following this, once the market has become more stabilized, LFG will obtain a 750 million UST loan, most likely from Terraform Labs, to rebalance its reserves. As LFG's $2.91 billion reserves are primarily backed by Bitcoin, so 91% of these reserves are in Bitcoin, the declining price of assets is forcing the entity to readjust its balance sheet to maintain UST's peg. And this is quite dangerous because now the reserves depend on the price of Bitcoin. If we had the price of Bitcoin, let's say at 40,000, and now it's down to 33,000, they essentially lost almost 25% in terms of reserves. And obviously you have to readjust the balance sheets in order to ensure that UST's peg remains, because now there is a discrepancy between how much UST is out there versus how much reserves are in the balance sheet due to the fluctuation in the price of Bitcoin. And this was one of the main things that were worrying in terms of having Bitcoin as a reserve for UST. So Bitcoin drops below $36,000 amid broader market sell-off. These moves follow a painful day on Wall Street in which the blue chip Dow Jones Industrial Average lost more than 1,000 points on Thursday, and tech-heavy Nasdaq fell by 5%. And these are the worst single-day drops since 2020 and followed big rallies in the previous session. And we know that crypto heavily follows the tech-heavy Nasdaq. They're both tech-heavy, so crypto is highly correlated to Nasdaq. Nasdaq fell by 5%, crypto fell by 10% because crypto is a higher risk asset. Therefore, its negative effects are going to be amplified. And when something happens in Nasdaq, something even worse happens in the crypto space, and that's exactly what happened. So interest rate hikes and tightening of monetary policy have sparked fears that the US economy could go into a recession, because on Wednesday, the Federal Reserve raised its benchmark interest rate by 0.5%. And I mean, what's different from 2008 or from 2001 when there were crises, or from COVID, is that the cavalry isn't here. There's no giant injection of liquidity to create the V shape. When we're talking about the V shape, we speak about the price of the indices going down and then going back up, creating a V shape. It's not going to be pleasant anymore because there is not a lot of free money in the market to bring back the prices up. Before, there was a lot of capital injection in the market because of COVID. Interest rates were extremely low and credit was given very, very easily. Therefore, if the prices of stocks or crypto went down, there was this easy money just to inject back into the market in order to pump the prices back up. But now, because the Fed is tightening its monetary policy by increasing interest rates, making loans more expensive, and making free money in the market more rare, that means that if there's a dip in the market, there is no free money available that people can just put into the market to pump the prices back up. It's going to be a lot of hard work out there. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and share this video with your family and friends. I'll see you tomorrow for the next one. Invest wisely, and cheers.